Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site, we have Andy Baehr, Head of Product and Research at CoinDesk Indices, as well as Jordan Rosenfeld, Vice President and Co-Portfolio Manager of ETFs at Calamos. We're here to discuss how digital assets are maturing and reshaping traditional investment strategies and financial infrastructure. It is great to have the both of you with us. Welcome to TradeTalks. Welcome back.
Thanks, Jill.
Andy, we're coming off the consensus, and let's do a quick recap here because this year really stood out in terms of how this space is maturing on multiple fronts.
Totally. This year compared to last year was an echo chamber about the new ETFs and the volume, the inflows, the outflows. Everybody's watching those numbers every single day. And this year, that's sort of, okay, that's a base case, and now we can talk about immediate regulation in the stablecoin space and further regulation, loosening, new commissioners being appointed, things being loosened up, capital being raised. So, you were there, it was great to see you there. There were a lot of themes that were interesting and kind of energetic, right? Yeah,
and we're certainly going to get to some of those themes because there were a number of them that really stood out in terms of our coverage. Yep. I want to talk about the product itself, Jordan, as we're seeing it being built around Bitcoin, which is allowing for more institutional adoption because now you're able to manage some of the dynamics in the market.
Yeah, that's absolutely right. We talk about maturity. I think the emergence of options on Bitcoin, particularly flex options on the SIBO, these are centrally cleared. That was absolutely critical. I think it gives the asset class credibility. And a liquid volatility product, is needed for firms like Calamos to repackage the risk inherent in Bitcoin and make it palatable for a lot of portfolios.
Let's talk about some of those use cases and the fund that you have over at Calamos and how you're looking to dampen that volatility. I mean, this year was a great use case for that.
Yeah, exactly right. So, Bitcoin down 30%, right, year to date and back to unchanged. During that drawdown, protected ETFs really showed their resilience. Calamos, we have an 100% protected ETF, ticker CBOJ. That fund drew down about 1% during that time. So I think it was a pretty good proof of concept that, these things do work.
So it's more a function of more predictability within the portfolio. So it could be capped on the upside as well, but it gives you a little bit more, helps you model your risk out.
Yeah, that's exactly right. So, the way these work is over a 1-year period, the strategy is designed to give you upside exposure up to a cap rate and protection. We have, 3 different protection levels, 100%, 90%, 80%. The cap rates are, commensurate with the level of risk that the investor is choosing to take. And we've seen some pretty interesting use cases for the 100% protection, really as a cash alternative, which is kind of interesting because there's no risk of, principal loss, but on the upside, you could get double the risk-free rates. And the 80% protection has very equity-like return characteristics, but the annualized returns have been much stronger.
Yeah, and it's interesting that he brings up equity-like because my question to you, Andy, is crypto an asset class at this point?
That was our first panel at Consensus with Anthony Scaramucci and John O. Steinberg from Wisdom Tree and Pierre St. John from 3IQ. And I actually wrote the title myself because I really wanted to kind of squeeze out of these guys whether we could call digital assets an asset class yet, meaning is it investable? Is it allocatable? We all know you can trade, but are people willing to invest? I think the Calamos product is a good example of people willing to take a longer term bet. The rest of the asset class after Bitcoin, people still like to trade. So I think the conclusion was almost, not quite. We're certainly with CoinDesk 20 pushing as hard as we can with new products like ETPs and Wisdom Tree in Europe. We'll have some announcements in the United States, hopefully very soon. Structured products in Asia, again on this principal protection front. So I think Anthony said that 500,000 in Bitcoin would imply an asset class. The point was made that all of crypto is as big as a Mag 7 stock. So how can you really think about it that way? So I think these are valid points. But in terms of the wrappers, the availability, and the way to tailor risk, long-term investors, especially even those who accumulated their wealth in Bitcoin and now want to diversify, it's time for them to look at these solutions. And I predict now in 2025 we'll see much more of that happening.
It's interesting that you call out the EU specifically. There certainly is a demand for the ETPs with the crypto underlying assets for sure.
Yes, that's right. And the Wisdom Tree product on CoinDesk 20 is off to a fantastic start. I think the market has helped, but also just the fact that it presents the QQQ of crypto, this idea that a very, very liquid representation of the digital asset class is available in an ETP, and it's in it for the long term, very diversified. It sits next to a Bitcoin position pretty well. So, we're kind of doubling down on this idea that you want to kind of be broad, go out to the 20th digital asset, have a capped position in Bitcoin. And when events like the last couple of weeks happen, when the rest of the market sort of catches up, like after the election and over the last couple of weeks, you really get to experience the growth.
Yeah, and it's interesting that you're seeing the innovation within the ETF space. What do you foresee going forward in terms of new product and other areas to get exposure?
Yeah, when you talk about different underlyings, right? Like you could definitely see these protected ETFs expand to something like Ethereum or Solana, but kind of the requisites, right, are liquidity and market demand. And as of now, Bitcoin is really the only one that fits our criteria. But I mean, the spot ETFs have been enormously successful. iShares and Fidelity, those two ETFs were the two most successful launches of all time. So I think there's a very strong demand story for Bitcoin. I think it remains to be seen whether we'll see similar for other coins.
I think that's exactly right. Not because those aren't interesting, but because choosing is harder than ever. When you look at the performance of Ethereum, although it had a head start as a regulated product in the United States, people are hearing more about Solana, right? And that's just one example of layer ones kind of in a showdown to see who's going to get the most mind share. So we liken it, actually on the panel we brought it up, it feels like 1999 where there's a bunch of tech stocks out there, right? You don't necessarily want to pick which one, but you know that this space is going to grow and you want survivorship bias on your side. So I totally agree. It's going to be hard for all these things. There are a ton of single name ETF filings out there that the SEC is looking at. Those are going to be great trading vehicles. We continue to say that asset picking or market timing remains very tough in the digital asset space, yet we all know blockchain technology is going to grow. So we say buy the index.
But that's a great point that you make. I mean, you likened it to the late 90s and so forth. It's just like the semiconductor space isn't NVIDIA. There are other, aspects to it and not just, the semiconductor chips themselves.
You wouldn't have picked NVIDIA in 99. You would have picked Cisco or Intel, right?
Right, but that's what I'm saying, like trying to identify one as the axe within the space or not. It's still, how many years are we into this now? 14, 15 years of the asset class itself. It's still young and it's still maturing. But what year was it? And here we are, talking about derivatives products.
Yeah.
So Jordan, why not invest directly in the underlying and go to an ETF or something within a product wrapper?
Yeah, I mean, that's a great question. So when we talk about the ETF wrapper in general, for many people, this is the easy button, right? I mean, you can buy it directly from your brokerage account. You don't have to worry about self-custody risk. And, frankly, like the management fees are comparable to institutional, custody services. And, for the protected ETFs in particular, right? I think, you have a lot of people who can't stomach a 70 to 80% drawdown that just happens every couple years in Bitcoin. So this is a way to pull in people on the sidelines who are a bit more conservative and just can't own spot. And it's also traditional asset allocation models, they suggest a 1% to 2% allocation in Bitcoin, right? That's not that exciting. Like that's not really going to move.
It's not going to help if you're thinking about correlation. And I wonder if the demand that retail investors and advisors are having in general with the alternative space is also providing a tailwind because this could be considered your alternative allocation, right?
Exactly right.
Yeah. So factors, I guess risk tolerance is certainly one of them. But before you dip your toe into this, especially if you're new to Bitcoin or if you're looking to get in other areas of crypto, what are some of the biggest factors you should think about in addition to your risk tolerance?
Yeah, I mean, you should think about your investment objectives, right? Like, what are you trying to do? Like, there's Bitcoin income ETFs. Like, is that what you're interested in? Do you want capital appreciation? I think those are.
And that's why you could see the attraction in the product wrapper, because it sounds familiar to investors. Andy, when we think about growing institutional adoption, every single conversation, I think we recorded 25, 30 videos at Consensus, stablecoins
Yes.
and tokenization were even more so than policy, were part of every conversation.
Yeah, I just actually spent the morning at a stablecoin event and met a lot of stablecoin folks who are involved, really grew up in the payment space, right? So this idea that with regulation in front of our legislature right now for the Genius Act, things could change overnight, and suddenly you could have a platform for regulated stablecoins in the United States, which could immediately change payments. A lot of things that are on the sideline, again, could start to be activated. There's already $250 billion of stablecoins out there, and so this is a market that really, I mean, I think many people are underestimating how fast this is going to grow and what a great business it can be, how it can change people's lives. Think about how many times you use PayPal or Venmo or something like that. These are front ends that are attached to a very kind of old, creaky kind of transmission system. So I certainly had my eyes opened even wider about this this morning. For crypto investors who are thinking about the asset class and price appreciation, every time a stablecoin trades, it needs a layer 1 blockchain to trade on. So if you just, what's the use case for Ethereum? What's the use case for Solana that's not meme coins? You know what? Stablecoins provides a pretty good example.
Yeah, and if you look even longer term out as assets start to get tokenized, that's going to be your source of liquidity, which of course is important for asset managers. But the total addressable market, we tend to think of crypto in terms of value and hedging and trading and so forth. But the fact of the matter is there's a couple billion people around the world who don't have legacy financial institutions to transact business or raise capital or grow their local economies. And this has been their medium to do so. The
democratization of everything from trading NVIDIA stock at whatever time of day and whatever location, all the way to having access to US dollars or US dollar kind of value, which is stored in a way which is regulated in the United States. That's great democratization. Another example is, many people can't or would have a hard time owning US Treasuries, right? And one of the problems that the government has right now is that the ownership of US Treasuries is fairly concentrated. So if that can be democratized as well, right, you have another solution there. So I think this kind of next couple of months are going to be pivotal, and suddenly there's going to be this mushrooming of applications which comes online and starts to be activated, which starts to solve these problems. And again, that's great. We love to see the business happen. I'm personally excited to see the activity on the blockchains that's a result of that, to see those fees coming in, to see Solana and Ethereum staking continue to provide security for those networks, to see the other networks, Sui and Cardano and Avalanche, that are in CoinDesk 20, that are key layer 1 blockchains, and just see how they start to compete and grow. Finally, at the same time we're getting better regulatory coverage for investments, we'll get more activity in layer 1 blockchains, and that's a great recipe for diversified portfolios.
And that's when you start talking about fundamentals in the space, because one of the pushbacks have been, okay, what do the fundamentals look like? I don't see a balance sheet, I don't see, but as it starts to get diversified and the broader market understands the use cases, now you're talking about fundamentals, because I mean, that sounded quite familiar to me. Would you say, Jordan, that once we get more clarity around regulatory framework, that could be a really strong catalyst for continuing to push product adoption and innovation?
Yeah, I think absolutely. I think we did get a lot of regulatory clarity, recently, right? Like after the executive order. And I think this administration has really taken, 180 on its, stance on crypto. I think the SEC task force has really shed light on a lot of the regulatory framework. And then one thing in particular, Ethereum, we're still waiting on some guidance on staking as it pertains to like a 40 Act fund and ETF. That's a big headwind. That could drive a lot of adoption into Ethereum products.
Yeah, which is interesting because this actually has bipartisan support,
right?
Which is somewhat paradoxical. But Andy, to wrap up here, the last key themes that we focused on were security and privacy as it relates to the blockchain. Financial institutions, this is something that they need to manage.
You know, the whole movement started with this idea of just kind of pervasive transparency and everything on the block, and everybody can see everybody else's stuff. And I think as the industry matures, you realize that's not going to suit, right? Private information, trading information, you can't circumvent sort of regulatory requirements. So the industry is responding, and I think we're seeing some blockchain approaches to that. We're just seeing some other service provider approaches. You know, the institutional world is growing up very, very quickly as a lot more trading moves onshore into the United States now that it's a friendlier environment, and with MiCA regulations taking effect in Europe. Yeah, there's going to be a lot of changes, and we're going to have to sort of meet in the middle. For some of the purists, that might be frustrating, but you know, the purists built something beautiful that everybody wants to use.
Right. Well, I mean,
so,
patience does need to be exerted, right? You're not going to transform a legacy institution overnight. There are not even just the technology and the skill sets that go into it, but guess what? You know, we are heavily regulated.
Yes.
And it's costly. And you know, it's going to change the way that you model risk. It's going to change the way that you respond to compliance and so forth. So some patience does need to be
totally
exerted.
If we can get to that point of violent democratization and you know, and faster settlement times and 24/7 activity, I think those are just some great goals, and you know, we'll take it from there. But things are looking pretty good, and with prices up, I think with Bitcoin's all-time high this morning, I think prices are looking pretty friendly too right now.
All right, appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.